Hello and welcome to another update video about TRB. Reason I do another follow-up video is because of the crazy movements we had yesterday. I made the video yesterday while the movement to the upside was already underway, but also I didn't expect such an escalation, obviously. However, the targets for this third wave that I mentioned yesterday, they were reached and the price was rejected strongly. So if there is manipulation or not, and I'm not dealing with this kind of stuff. There are people who watch the wallet sizes and everything. That's nothing that I deal with. To be honest, I don't really care. But obviously any altcoin is dangerous. Okay, you need to know that, especially when they are pumping like that. Okay, so I sincerely hope nobody who's watched the videos yesterday or something bought at $500 or something. The reason is we were in the target area. Okay, so we'll talk about the chart now. Maybe a few introductory, a few more words in the beginning about how to understand also the analysis. I mean, it is pretty clear, I think, but still. So first comment I received, a few comments really. So I just want to make sure that everybody understands what's going on here, because obviously this is an altcoin, so any altcoin is dangerous. That's fact. Okay, so there is no, so obviously it's extremely risky when you buy any altcoin. That should be common sense and clear to everybody. That's the first the first thing to mention. The second point is that obviously any altcoin is more volatile than, for example, Bitcoin. Well, not any altcoin, but altcoins are typically more volatile than Bitcoin, for example, and then most other asset classes, if not all of other asset classes. That's the other thing. So don't be surprised if we get crazy volatility. Now, and then there are obviously some levels that we discussed. Okay, so in some of the previous videos, we discussed this area as potential buy area and a potential entry point. Now, I can never tell you to buy or not, because look, this is an area where a pullback trade could have been made, but there are breakout traders, right? There are not everybody likes pullback trading. So for breakout traders, obviously the break above the previous high would have been a potential entry point. So I can really only share with you the levels. I myself, when I buy altcoins, I generally like to do pullback trading, literally because I don't have time for anything else. You can obviously trade altcoins also as a trend, like aggressive trend trader, momentum trader, I should say, because even a pullback trader is a trend trader. But that takes much more babysitting, also time I don't have, right? I mean, literally, I don't give any advice, but this here was the box where we had very clear parameters, stop below the box, potential entry point. I shared that a month ago or a couple of months ago, right, when we reached the top here. So that was the area to potentially consider a buy, not up here, okay? In fact, I gave you yesterday a micro support area, yeah? The price obviously escalated away from it so quickly that, it needs to be updated all the time. The idea is, after such an area has been locked, which it only is once we start a pullback, you can obviously layer in if you like to. Then the price moved, and yesterday I presented you with targets for the upside, and I highlighted to you that I think we were sort of around, I don't know where we were yesterday, 260 or something. That there are a few targets, the entire range basically for this third wave, between 374 to 1,256, huge range, but we landed in the middle. And then I presented you with an additional area where we had additional confluence between 456 and 750. The price landed in it, so, and got rejected. Now, you can say that's manipulation, but also the mass sentiment plays a role there. And I just relate to a comment that mentioned yesterday, you cannot, TA doesn't apply here. Of course, otherwise, how could it have been rejected here, and how could it have turned around exactly here? Now, TA has a predictive aspect to it, also Elliott wave analysis, but a lot of the comments I sometimes get, they relate to the assumption that I would use it mainly to predict prices. Now, that's not the point. I use it to focus on risk management. risk management. The levels I share, they are levels for risk management. So if the area was specified for a target, then this is not the area to buy. This is rather the area to sell for those who bought down here. And obviously the price moved so quickly, I couldn't update the chart. But today I present you an additional area here of support, which is now at $70. So the price is already back at 205. So that means the wave count hasn't changed at all. It's literally that probably this third wave topped in the bullish interpretation, and one more high can be expected, but only as long as the $70 level is holding. Now that's the risk management level. A sustained break below $70 will mean that likely the red count plays out, which is much more bearish. Now what does that tell you? That tells you the risk is huge already now. Look, the price needs to drop a whopping 65% to tell us it's bearish or bullish. Now, if we get another high, I mean, the area around 790 to 1250 is a realistic assumption, right? But obviously, whenever a third wave is done, the highest probability element of a rally is done. Okay, yeah, we might get the fifth wave, but we might not. A lot of coins top after 3 waves. And this is obviously an extremely dangerous coin. This is not a normal wave 4 that we've seen. There was possibly a degree of manipulation. So just be careful here, okay? I just want to explain to you the risk, okay? So if there is a fifth wave, it should take us above 634. So the reward to risk ratio, you could say, isn't even too bad. But I wouldn't do this with it. I would only do this with pocket money because it can drop literally 65%. So obviously, if the price gets close to 70 again or 118, you know, the position size would naturally be a little larger because the stop would need to be somewhere below the 50% fib level. Okay, so hopefully that gives you a little bit of clarity. I also explained the levels again, the support level. What happens below 70? Well, I would have to assume that all of this is some kind of a flat structure. So an A wave down, A, B, C, and an overshooting B wave, and then the C wave to the downside. Where could that take us? Well, into the $20 region. Why? Because the way to calculate the length of a C wave is we take the length of the A wave, we go to the high of the B wave, and here $23 will be the first target, but only if 70 breaks. Yeah, that should give you everything you need to know. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.